Welcome back, everybody, to a brand new episode of the Speculators Podcast. And I want to start this off with a quick question. Have you ever had a losing trade? Show of hands, anybody out there? Listen, losses happen in our trading, and losses can be extremely painful. There's a great old quote that goes something like this: pain can be an excellent teacher if you can face it instead of running from it or trying to sedate yourself. And as we're trading, losses happen. They're very painful. And the natural reaction that we have is to want to avoid it, to want to distract ourselves with something else. But if we can muster the courage to face the pain, it really does have the answers of what we need to do to improve and to be better. In this episode, we're going to listen to several clips from past episodes of our guests talking about dealing with losses and dealing with mistakes in our trading. An incredibly important topic. I hope you get a lot from this episode. Let's jump right in.
Repetitive mistakes, once you've identified them in your trading, I see way too many guys who aren't hard enough on themselves. They say, oh, I always make that mistake, I'm so dumb, blah, 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 and they gloss over it. Your reviews, yeah, maybe you start out by saying, I make that mistake, I'm so dumb, blah, blah, blah. What are you going to do about it? Which brings me to one of the most unifying fabrics of the daily work of trading, which is process-based goals. Okay. Don't tell me what your P&L goal is for the day. All right. Well, I'm going to talk you out of doing that one. Tell me what is within your control and that you've gone through a full, multiple cycles of prep, journal, review. And then you get to the review from yesterday and you know what areas that you need to improve. In that review, you need to come up with kind of an action plan. What are you going to do tomorrow to nip that in the bud, right? To take care of it, to make it to part of redefining what it means to win for that session. That's going to be what you focus on, not the outcome of the next trade, not the P&L for the session, but doing that one thing that you've identified from all that work that can take you to the next level. And a lot of times it's just basic things that are kind of a drain on our P&L, even for profitable traders. If you can plug some of those leaky holes, man, you won't believe what it'll do for your bottom line. And that allows, you to thrive for the winners that you're already going to have otherwise. Let's not lose as much of those winners along the way.
For sure. And it's very interesting that such an unsexy topic, but it's this idea of having these reflections and being able to make those meaningful steps forward in trading. It's such an important step. And I think there's been, even looking back at younger times, there were so many seasons of my trading where things were just so chaotic, even to like your point where I couldn't even reflect enough to boil down that, hey, I'm just making these same two mistakes all the time. Like if I just stop doing these two things, most of my losses go away and I can take advantage of these winners. And a lot of times the unfortunate answers, they're so simple and sometimes right in front of us. And just by missing that step of doing this work of reflecting and something that might not be directly related to P&L going up, even though it has so much to do with P&L going up.
There's no videos online of guys with the Lambos talking about how good a job they're doing at reflecting on.
Yeah, exactly. Was there anything that surprised you as far as commonalities? Like every single one of these people have a physical journal they write with, or they're all vegans, or anything that was kind of like unique?
Quite a few of them did keep journals. And I think that's, since you mentioned, that's not an exact direct answer to that question, but on that point, it is a good point. One thing that did come up a number of times, and maybe most prominently in Ray Dalio's interview, because he's such a believer, is learning from mistakes. And keeping a journal is one way a lot of traders do that. And it's very valuable because if you do that, whenever you have a trade that's notable in any way, it could be a trade that you did things right and it worked out. That's okay to put that down too. But the most important ones are, you did something, not that you lost on the trade. People get mixed up on that. It's not whether you won or lost, it's whether you did the right thing or the wrong thing. So if you followed your process, which is a net winning process, and you lost, I mean, it's a big game of percentages. Even the casinos don't win more than, depending on the game, but 47, 48, might be more in roulette, the slots machines. But bottom line, even they don't win 100% of the time. So it's just a matter of probabilities. So you're going to be wrong even if you do everything right. But those trades where you did something wrong, like you ignored what you knew you should have done and you didn't do it and it blew up in your face, that's what you got to put down. And then you need to review that periodically. And the idea there is it's impossible to avoid mistakes entirely, but most people make the same mistakes over and over. If you can recognize those, and at least if you don't eliminate them totally, just you do it far less often, or eventually, hopefully, eliminate totally, that could really improve your trading a lot. So the journal thing is good advice for a lot of traders. And like the most recent book I did, Unknown Market Wizards, I think there were like 3 traders that just brought out these binders that were like thousands of pages of trade. They really were religious about keeping those records, and did very well. And I think that was part of their winning process.
Do you think that it's putting too much on somebody for them to be able to accurately diagnose what is happening in their performance? Or do you think that most people should be able to figure this out? And because you said it a while ago earlier, it's very easy to think that it's this, but if you could accurately see what's happening and go a couple layers deeper, it's actually not that at all.
I think it's really hard. I mean, I think this is why we have specialists like myself in this field. I'm not saying it can't be done. And I would generally say that if you try something and within 2 weeks, you see no material change, it doesn't mean that, like you said before, right? You're not the problem. It's not you. It's your current understanding of the situation just isn't correct. And you do need to go, kind of layers deeper, or just need to think about it from a different perspective. I think like all that stuff. I mean, listen, I've worked with many therapists in my life. I've worked with other coaches in my life, because it's hard to be, a trader and then also your own coach, and so we need multiple forms of feedback, and we need feedback from people that have seen, lots of things in their careers to provide perspective. And that doesn't mean that I or we are always right. It just means that it is, I think, very difficult to have that self-diagnostic process be accurate, because it's dependent on your knowledge base. So yes, you may be an expert in you, but are you really? That awareness, like you could, be into meditation, you could be really, really self-aware, but awareness could quite literally just be, I've just dumped, 1,000 puzzle pieces on a table, but I don't have a picture of what this is. And and the puzzle pieces are complicated. It's like hard to kind of fit together. So, I think working with somebody else or reading a book, can be just a more efficient process or practice. But I'm not saying, this is the only way to go. Like, you can do it. It's harder. And I think sometimes it's just having the right perspective on how you're trying to do that self-analysis. But yeah, I think it's like anybody wants to come into trading. Are you going to come into trading, kind of naked and just not look at any resources and, read any books or watch any videos? Or what? I think very few people would do that, but on the psychological side, they tend to think that they can. So their consumption is 95%, in terms of building strategy technique for the trading side. And, then they think that it can be easier to solve some of the mental and emotional things.
Yeah. And I think it should be said and even discussed, the idea that it's a lot of pressure to put on yourself, especially when you're in the middle of something. When you can zoom out and you get somebody who doesn't necessarily no emotional attachment to what's happening and can just see it, it's incredible how things you'll just never see, and you could struggle with them for years because they just won't fix themselves. Somebody could see it in a minute, and the idea that in yourself, you have to be able to be this performer. You also have to be able to accurately diagnose what is going on and figure out what the solution is to move forward. This is a lot to put on somebody, and you have to be a very special person to be able to do that well. So getting help, and having outside inputs, big time important. Being a trader that, you got the 10, you got the 20 years in the space here. When you look at your own personal trading, do you think of this as you're good and you're just managing and kind of coasting, or are you in a position where you still have shortcomings that you're actively working on, or is it not that you're actively working on them, but you're just managing them and making sure they don't flare up? What's kind of the journey like for you, being where you're at?
I have to tell you, because I think this is the perfect occupation for me, because I'm in a constant learning state.
Yeah.
It doesn't matter who I bump into, whether it's someone who just started trading or someone who's been trading for 50 years. I can listen and go, I'm going to digest that a little bit, and I'm going to see if that knowledge allows me to see the market more clearly. So I would say every day I'm climbing. Every day I can look back at something and go, you could have executed that with a little better granularity. You could have been a little more focused because you saw the level before the market opened, but somehow you were over here drinking a cup of tea or whatever, and you missed the line because you should have put an alert prior to that line coming in. And so little things like that, I will have the tweaking event, right? So there's a tweaking event, and then there's all right, what is it in my toolbox that needs sharpening? Well, you need to learn to trade with trend better. You need to realize that break and then not be afraid of giving up your gains that you made inside of the range and just following it through on the break as you wait to let price action confirm that it is coming out of that particular level. And so that's a toolbox that I built. I build toolboxes with my options a lot, right? How gamma flow works, how the lines can absolutely shift intraday because a big player has come out and put, 100,000 options sitting at one particular strike, and it'll absolutely shift where the gamma exposure is, just like that. And you won't really realize it unless you've got those things in the back of your mind going, price action is looking different. Let me go check out the chains. And so I'm always in a state of learning. I'm either tweaking current process to go, you could have executed that a little bit better. The framework doesn't change, but my ability to engage quickly, execute at process ideals, and then exit at process ideals, that's going to vary on whether I slept well, whether I'm in a good mood, whether I'm completely focused. And those are the things I can go, you should have made sure you had protein for breakfast instead of just skipping and whatever. And then every day I'll go, all right, what am I learning about bond flow? What am I learning about macro exposure? And so I'm in a constant state of learning and flux, but not giving up the core events that go, okay, here's what happens when price action is being accepted. Here's what's happening when price action is getting rejected. Those things remain static. And I think a lot of times traders in their learning space, they pick up one style and then drop it and go to another style. And so it's like a salad bar kind of, and they never get a synergy about what might work for them in a certain time and space. It ends up being, a scope drift, and you don't really pull down into the core aspects of what you need to do. I think that's really, really hard for traders trying to find their own way.
Yeah, and I think that should be talked about maybe even a little bit more here, because there's, I think, two dynamics at play, of one, of just trying things and bouncing all over the place, and maybe even hearing a seasoned trader like you who says, I do this with options, I do this with longer term, I do this with, trading, and maybe not fully appreciating that the part of the journey that they started on, you didn't start, I'm assuming, with all of these things, but you started with something, it worked, and then you added on and put more things in your tool belt. But you did have that core thing that you were dialed in and focused on. And then I think it's just very common for some reason the old saying, it works so good I stopped doing it. To start doing something, to have a little bit of success with it, and then for some reason forget that the reason I'm having the success is because of this is what I'm doing. And then we just start doing other things, and then the results go away, and then we forget what the results even happen, and then we start doing something else. And you said at the very beginning, I highlighted this to circle back around to at some point, but you talk about being focused and how important that is. The day to day, of course, like you were describing it, but then just in general, having that core thing that as you're learning new stuff, you're not reinventing your method every time you're learning something, but
Exactly.
you're adding depth, you're adding in additional resources, adding things that can help you with your core understanding and the skills that you've built, to take better advantage of more things the market can throw at us. And
Very true.
if somebody is identified what they are struggling with, because I feel like for almost everybody, if we looked at anybody's trading, it might be overwhelming, or it might seem to the person like things are just not working out. But if you had some records and if you had some clarity, if you could just dive into it, there would just be a couple things that are causing the majority of all the issues. That if you just straightened out, these 2 to 5 things,
Yep.
most of the losses go away, most of the winners are, everything just flips around at that point.
Yep.
And let's say it's maybe obvious that, hey, I am constantly, putting on way too big position size. I am getting caught up in the action or the noise. I'm, letting myself take off perfectly good trades early. If somebody knows what their issue is, but they find themselves just kind of continuing to repeat the same actions and not maybe being able to improve in that area, what would your advice be to that person?
Separate all those actions and attack them one at a time. Don't think you will attack them all at once. Like for most people, it's a laundry list of things. It is for all of us. I mean, trading, it's such a difficult endeavor, and we all struggle with our own demons all the time, right? Everybody's got their Achilles heel, and usually it's multiple Achilles heels. But I think the only way to knock them all out or weaken them all is to weaken them one at a time. So find the one that is the most egregious and just say to yourself, look, the next week, the next month, the next quarter is not going to be about the P&L. It is going to be about eliminating this thing. So I will try to keep very, very specific, records. And I would say, okay, on my next 10 trades, I want to not make this mistake. And then, okay, can I go 20 trades without making that particular mistake? You know what I'm saying? That's what I think. I think separate it and divide and conquer and just attack each one specifically for as long as it takes until you can get that out of your system and then move on to the next one.
I was brand new. It was the first time I'd ever made a market, and I got smashed. But I just had to learn, and that's just what I said. And the thing was that everybody laughing at me because of that first trade, just it's extra incentive to learn, right? And this is something that I think is an advantage when you're in that environment as opposed to sitting at home. Is one advantage is you've got all these other drivers going on. And the other thing is I had more things to learn from. So I'm looking at the traders around me. I'd already seen the guys who had been losing. I knew things that they were doing that was wrong. And again, when you trade for yourself, you only see your own mistakes. But when you're working with lots of other traders, I'm getting to see lots of mistakes. So I'm seeing, and I just kept looking at them thinking, no, I'm going to learn. And I just did it. And it was surprising how I've always found this with a lot of traders in banks, on floors and other places, that there's lessons to be learned and they're just not learning them. And I couldn't understand it. And after about 4 months of trading there, I would clearly established as like the most profitable trader there, clearly was outperforming all of them. I was actually asked to start giving tutorials, actually teach the other traders after like literally about 4 or 5 months, because the management can say, well, how are you learning these things? And so I actually was telling the others, but it was quite interesting to see how they weren't learning some of the things and I've always found that interesting. But yeah, I just took every trade as a learning potential. Every trade, every loss was a learning potential. Tried to learn the lesson from it. If I couldn't learn the lesson from it, I would just try and avoid that situation. If I could learn the lesson, I was better for it. And just did that. And I think another thing that I've sort of mentioned before is we a lot of us are aware. I think it was Anders Ericsson came up with the idea of the 10,000 hours, right? Which has been spoken about quite a lot. To become proficient in something, you need 10,000 hours, and it's actually not necessarily 10,000 hours. That's a sort of average, right? But it's around that, In trading, I think it's different. I don't think it's the number of hours you spend as a trader. I think it's the number of trades. You know, I could spend 5 hours watching the screens, but if I'm not trading, I'm not really learning anything. And one of the advantages I had was I was in a market against other professionals, only against other professionals. So clearly I'm trading against some really good people. But I'm doing about 150 trades a day, maybe more. Now, you know, to put that into, I'm doing 700, 800 maybe trades a week. For the average, for example, retail trader, he might not do that a year.
Sure.
Right? If you're doing 2 or 3 trades a day, you may end up doing 500, 700 trades a year. I'm doing 800 a week. So 1 week for me, in terms of the number of trades and the number of lessons that I have possible to learn, is equivalent to probably a year of an average retail trader doing 2 or 3. So if I'm there for, and that's just 1 week, if I'm there for 52 weeks, that's almost like 50 years of experience that I get in my first year through the number of trades. I'm doing thousands of trades. So I think that's a real advantage. And I'm big, with the Northern method and the other things, I value frequency. And I think a lot of professional traders do. And one reason is you learn a lot more if you're doing 10, 20, 30, 40, 50 trades a day. You've got so many more learning opportunities. So I think that helped me. I had hundreds of opportunities to learn every day. And, that if as long as I learned those lessons, my learning curve could be pretty good, pretty steep.
And that's why I say, like what you said about it has to go from here to here. The only way it goes from here to here is to go through a period of losing a shitload of money. Because you're not going to believe it until that happens. And that's why I say people have to go through, I manage money. One of my clients is a multi-strategy hedge fund, right? And because I've been in this business a long time and I've raised money and I've had clients, sometimes they call me up. I don't work inside their fund. I'm an outside manager for them, but everybody else works inside their fund. And they have these PMs who are like, oh, what do you think's going on with this guy? What do you think's going on with that guy? I said, look, man, you hired this guy. This is the first time he's ever managed money. Okay. So what do you think's going to happen, man? He has to go through a period of losing money. Otherwise, he's never going to be successful. So what do you think's going to happen? You think this guy's just going to come out of he's a smart guy. I'm like, I'm not doubting that he's a smart guy. Okay. But that's irrelevant, right? The fact that he's a smart guy makes it even worse because he knows he's smart and therefore he figures he can't fail. And the market will, as they say, humble you quicker than you know what to do with, right? So he's got to go through that. So how do you guys expect that not to be the case? He's just going to come and be a smart guy and just make money out of the gate and just make money forever? I don't think anybody has ever done that, okay? How is this going to be the first person, right? So I think that what you're saying is exactly right. The only way to go from your head to your heart and really believe these things is you're going to have to lose money, right? And that's why I go back to the whole point of go to law school, right? Because you're going to have to go through that period.
What's the path forward in working on your performance? Because a lot of different issues come up with our trading and we can't tackle everything at once. What do you think is like the best way to make progress on the mental, emotional side of our performance?
I would say pick either the biggest, most costly mistake that you're making or the one that's the recurring the most often and is just annoying, right? I mean, things sometimes don't cost you a lot, but when they happen a lot, it really can, kind of take. So I just pick one of those two dynamics and then begin to kind of peel back the layers to understand why the heck is happening. Because for the most part, right, if something is recurring like that, whether it's big or small and frequent, it generally means that there's an emotional issue at play there. And even if it doesn't feel that way, the odds are that it's there. Now, it doesn't mean that there's no technical weakness to work on too, but generally speaking, there's probably going to be a little bit of both. And so when you start to then do that data collection around those mistakes, around those instances, you begin to start to create a map or a pattern of what is happening. And that begins to get to that first stage of awareness, and maybe, right, it can create some prevention, preempting the problem from occurring, which can build a little bit of confidence, both in your analysis, but that generally is not enough. We then need to use that data to then ask ourselves, what is actually at the root of this? The analogy that I would use here is, right, the signals are the data that you find, okay? Much like the pain, the signal of pain that would occur if you had a rock in your shoe and you're walking down the street. right? That signal is not the problem. All of the things you've collected are not the problem. The rock, right, is the flaw, the bias, the wish, the illusion, the cognitive biases that we're talking about. That is what you're trying to use. So you gather up all these puzzle pieces, and then you begin to start to deduce and figure out what is at the core of this. And, going back to your points before, right, how hard is it to actually do that? You look at, for some traders, if you just ask yourself some legitimate why questions, like why am I thinking this way? Why am I reacting this way? You're going to start to get some new answers. And maybe that answers will be insightful and can start to change your perspective. Maybe not. Maybe that's not enough. And so you need to go a little bit layers deep and maybe gather a little bit more knowledge. But I mean, that's generally the kind of the process that I walk traders through in my book, and what my program is really all about. It's like, step number one is recognition. You got to recognize in real time what's going on. Step number two is getting to the root of the problem, right, which is what I'm talking about here. And then step number three is actually devising a strategy that you can use repeatedly over time to eventually kind of deactivate, or in other words, like take that rock out of your shoe so that pain signal doesn't continue to reoccur. But I would start with the mistake, because that, like, we're not working on our mental game just for fun, not for shits and giggles, like, oh, this is exciting. It's like, no, you want to have it have a material impact on your trading. And if you start with the things that are most painful, I mean, that's generally the way to get the kind of most bang for your buck in terms of your time.
Yeah, it's very interesting how powerful the question why is, especially if you just ask it a few times, like, why did this happen? Well, why did that happen? And then just kind of follow that through, 4 to 5 times. It's interesting where you wind up usually. When you are dealing with mistakes and having this process of reflection, is this something that is very just intuitive, or have you built maybe some frameworks around this to where, like, you have a document, you ask yourself certain questions, you make notes of it, you review it, or is it mostly just like looking through and making the mental notes and trying to do better next time?
In the beginning, it was very much, I got to write everything out. This is what I saw, because what I did not realize was less is more. And so I used to have like 7 different indicators. Now I just have 2, right? I have a moving average and I have a momentum indicator, and that's it. And so I would start trying to, like, making a chronicle of every single thing. And then I made this great big spreadsheet with a grid and checked these boxes, and it just didn't give me clarity. Before I started trading futures almost exclusively from that space, I would have a basket of 200 stocks I'd look over every night, and I'd go, okay, this, and then I would have information overload at the bell and not one good trade. So now I go, okay, these 5 companies reporting, let's see how well they do relative to everybody else. Are they running hot? Are they running cold? I'll be able to set things up from there. But then I'll go, okay, now when I do poorly, I can look at that and go, because I log my trades on my screen, I can go, okay, poor execution right here. I could make a note. But all I have to do at this point is now look at it, and then I'll put a little flag. I'll put a little flag pattern on it. And so it tells me, okay, remember what you did there? The very next day, I can see the same chart. And so it's very dynamic. I used to think, okay, you traded badly today. That means you are a bad trader. That means you're a bad person. That means, why don't you go sit in the corner and cry? And a lot of us turn our performance into an indictment of who we are. Now, that on the flip side, we do it when things are hopping too. We're like, don't question. And so we do. We run in those peaks and valleys. I'm killing it. And so we run in those peaks and valleys. And what I learned to do is sort of temper it out. And I love the baseball analogy. You're only as good as your last at bat. And so that's the thing that always keeps me to that space where you go, I know you think you know what's going on, but let's pretend like you didn't. And what if you're wrong? What would happen here? And so that's really my favorite way to frame out. If I've had days and days of just gain after gain after gain after gain, I can literally feel myself going, yes. But when I feel myself doing that, I have that little check mark where I go, hang on now. This is where the market likes to punch you in the face. Make sure that you're watching yourself. So as I make more and more and more through a good patch, I'll start using less and less size because I know the market's coming for me. So that's that discipline space. Now, once in a while, I'll forget and I'll go crud, and I'll get a bigger size loss than I would have normally because I'm used to sizing up. But that first loss makes me go, you better watch out. Thinking too much of yourself right here. Peel back, take a look. So it's great self-regulation. Trading it taught me so much about who I was as a person, what my triggers were, where I had a tendency to get mad, where I had a tendency to be overly elated, and tempering myself inside of the space is really a daily battle. It truly is.
You can get your non-trading life in order. It should help immensely. And then beyond that, if you want to talk about the specific process, how I think trader takes it kind of to the next level, or moves from a level of, say, not profitability to profitability, or once they're profitable starts to increase size and ramp up or whatever. That sort of consistency, I think, mostly comes from record keeping and going back and studying those records, especially losing trades. Classic thing people say in the markets, which is 100% true, is that you're not going to learn anything from the winners. Go back, analyze losers, keep asking yourself the question, was this a good loss? Was this a bad loss? Was this my quote unquote fault or not? And if it was, that's where all the information lies. That's where all the self-improvement happens, right there at that point where the loss, not even when the loss occurred, because the loss occurs when you close it, but when that losing trade was put on, 99% of the time, that's the turning point right there. You can probably find one thing or a group of things that were happening that you didn't see that should have precluded you from taking that trade.
That's something that I've been doing from the start. That's probably the reason why I was able to turn things around and to actually make this into a career so quickly. I always used any kind of a journaling software, anything that I can look at statistics and data. So data analytics is something that I advise everyone to do. But obviously, when you're first starting out, you just need to observe what's happened and what time of day it was, how did it happen. And then for me, initially, it was almost like a diary kind of thing. 6:30, crude oil turned around. There was a bearish engulfing pattern around the value area high, or something along those lines. And that would kind of be my benchmark for a price behavior to look out for it as I kind of do the walk forward test to see whether that's going to keep happening and how often it keeps happening. This is the long-winded process of actually getting to data, which is why it's good that people like you and me, we've got these courses that actually tell people already all the stuff that we found out and that we came by with great difficulty, all just laid out. So that would be the first step. And then once I have that observation, I would start to try and make trades based on that observation, and I would track them. What was the size of the stop loss? If my stop loss got hit, would a larger stop loss have worked, and what size of the stop loss was needed in order for the trade to survive, or was it just completely wrong? Because that also happens, right? And all of that, I used to use Trader View, so not Trading View, but an older, you know what it is. And then after that, I started using Edge Wonk probably in the last kind of 3 years. But I'll be honest, I've been doing this for 14 years now. I don't really look at data analytics anymore because I know myself and my trading pretty well. And there's nothing really that surprises me in the markets because I have these systematic processes in place. And I never really do a trade without understanding why things are happening. I think that's also a big, big problem when people are starting, that they don't really have a lot of confidence. A, they don't know what they're doing exactly. And B, they don't have a lot of confidence in the setup because they don't understand the context. I get quite a number of traders coming to me going, hey, I just want a simple method. Trading is not simple. Trading is complex. It's not rocket science, but it is complex. There's a lot of components to it that you need to get right in order to have like a systematic, properly viable system, right?
Sure.
So yeah, so using data analytics is definitely what I would say.
Yeah,
I always fall back on, and it's been since, you know, since some of these online trade journals were released, start there. Use one, whether it's TraderSync or TraderView or whatever. That's TraderVue, not TradingView, which is the online charting platform. I mean, you got to start with the data. And I know that the platforms, whether it's Ninja or Sierra or Quant Tower, whatever you're using, Thinkorswim, doesn't matter. You're going to have trading data in there, you know, your fills and your orders and your P&L and maybe some other statistics. But the process of actually putting that into a third-party tool and then doing qualitative on the quantitative is, you know, I can't get anybody to do it. So that's where I'd start. And then if you're doing that, then I'm happy to talk to you about the next step. But I can't even get, I mean, I've shown in my room that I have that back from 2007, and then I have it from, you know, I worked with Greg on building TraderView. Greg's the guy that he was the founder of HostGator, and he was already a pretty wealthy dude, and he started TraderView. He's since sold it. But I was like the first guy to ever use the app, and I have data in there from 2011, and I could go back to a day in 2013 or whatever, and I'll have a whole page worth of notes, you know, in there. So the bottom line is it's a process, but before you get to that, you also want to be realistic about the amount of time and effort, effort just to get the baseline data. Like, and I'll finish it's too long of an answer, but if you're not able to really almost every day, but at least three days a week, watch the markets in whatever time zone you're in, but from about a half an hour before the cash open to about an hour and a half into the cash open. If you're trading stock index futures, if you don't have that time, then no amount of post anything's probably going to work too well for you for this asset class for day trading stock index futures. So you got to start with that. You got to understand the time just to create the data and have enough stuff to even reflect on, right? Yeah. You know what I mean? If you come in and wait for some major A+ setup, but you only can trade 2 days a week because you have a job and you have kids and all these things, day trading stock futures might not be for you.
Yeah.
So any amount of post on your one big trade that didn't go right, but you only trade 2 days a week, that's going to be tough.
Yeah, big time, big time. Okay, and kind of maybe even say what you just said back to you or differently. Very important to do it. Most people don't. And something that you've done for a long time. And one of the powerful things about it would be starting with something that you can do consistently, and maybe even building the habit of just doing some type of reflection, whether that's writing down one sentence about what happened the day and how you feel about it, or pulling your stats and just putting it into a third-party software, just doing something so that you can get in the habit of a baby step, that part of post, part of reflection is somehow part of your trading business now. Build that as a habit, and then just keep going from there, because I do feel that it can be overwhelming to pull out stats. It can be overwhelming to think about journaling and a lot of things if you've never done it. In a lot of for a lot of people, myself included, this has been an area that you have to grow into. And most areas of our trading, to me, aren't things that we're just born to do, but they're things that we grow into, and we just, for lack of a better word, we become worthy of it, you know? And it's the reason I even asked as well is because I do realize that it's amazing. It's a very hard thing to stick with and to get people to do as well. So anyway, thanks for the words.
It's super hard. So, I mean, if you wanted something, this I'll do in 30 seconds. If you wanted something tangible that you can do, is any amount of reflection and stuff, doesn't matter. Start with this. You need to establish, we're all day traders. We're talking about day trading. You need to establish a daily risk budget. That daily risk budget is informed by a bunch of stuff that I can't get into right now, but let's just say it's $200. So you know what your daily risk budget is. That's all you can risk during the session that you're trading. Make sure you have a daily risk budget. And then if you can't reflect every day or every week, at the end of each month, 20 to 22 trading sessions, how many times did you exceed your risk budget to the downside? If you lost 250 or 275 or whatever, just start there. What's my daily risk budget? Because we're all focused on our daily profit and what do we do in this trade or whatever. Set a daily risk budget, and did you exceed that daily risk budget more than 3 times in 22 sessions if you traded 22 sessions? If you exceeded your daily risk budget more than 3 times, your daily risk budget's too big, and we can take it from there. But that's a good place to start if you only want to do something once per month.